Right, hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Hope you're all well. Thank you all very much for tuning into my live webinar. Can I just get a heads up that you can hear me, you can see me okay. Administrator, hope everything's okay. All right, yeah, looks like everything's good. Is the screen good as well? I know you can hear me. Can you see my screen? Yeah. Okay, brilliant. Thank you. Okay, and if you're watching this on replay, thank you very much. After my last webinar, I was inundated with emails requesting the ebook. So if you are watching this on replay as well, thank you very much for your time. I've also got a very clear idea now of how many people actually are live on the webinar, because sometimes on the chat I can't see who's actually live. So for all the people I can see, there's 10 people online. Thank you for tuning in, and all the people watching through YouTube as well. Thank you for your time. Okay, I'm just going to direct you to this page. So if you want to take your trading further beyond this webinar, then please check out the following website, which is tdtpro.trade. Just to give you a background of myself, I'm a long-term trend trader. So the webinars that I present here for FX Street are all based on long-term trends, and that's not just in foreign exchange. I focus on FX, I focus on stocks, UK and US stocks, and also commodities. And this is something that I really encourage traders to do, which is look beyond FX. FX is just one market, but there's a natural flow of money from foreign exchange to stocks to commodities. And by following the flow of money, it is then how traders will see consistent growth and ultimately achieve what I say is the status of being a full-time trader. It's not a quick fix, guys, but by being in the position to take advantage of the most lucrative trends, that's how you're then going to achieve growth and consistency on your in your trading and on your trading accounts, and how one trading account grows to two, grows to three, and then once you've got a pot large enough to sustain a lifestyle, you can then walk away from the system. So it's more than achievable, but there is a process to it. The ebook tdtpro.trade, guys, if you want to check this out, this is a training course beyond what you see here with FX Street. If you want access to the ebook, which I have been sending out all week, I've literally been receiving about 5 to 10 emails every day since last Wednesday, which is fantastic. So this ebook, which is written by Anne Chapman, that's one of my mentors, it really breaks down technical analysis in depth. So the first lesson is the trading bias, and as you can see, it goes all the way through to the trading plan, which is ultimately what traders want, is a solid trading that plan that they can follow day in, day out. So if you want access to this ebook, and if I just scroll down, you can see that it's got charts, it's well broken down. I personally would say that this is a groundbreaking ebook, because if you go onto the internet, there's a lot of information, but a lot of it is very questionable. A lot of it is very misleading and it's inaccurate. And as private traders, we have to have a particular approach to the market. So this ebook should really be the new Bible for you as traders from a technical perspective. So this is all about technical analysis and how to break down a chart. I often get asked about fundamentals, and if I use fundamentals in my personal approach, there is a certain amount of fundamentals involved when it comes to stocks. But when it comes to currencies, my approach is 100% technical. So I ignore the news, I ignore all the noise, I ignore all the experts out there giving their opinion. It's all just noise. Price action and the charts on the larger time frame tell me everything that I need to know. And so this is what I'm encouraging private traders to do. Focus on technical analysis, but also focus on the bigger picture. Let the charts guide you. Let price tell you what's more likely to happen next. Okay, so a very in-depth ebook, guys, which I will be sending out at the end of this webinar. Okay, so all you need to do is email me. I'll be giving the email out. My email is Zaheer at tdtpro.com. So if you're not going to be staying all the way through to the end, my email is my first name, Zaheer, Zaheer, at tdt Thomas Delta Thomas Pro.com. Okay, all right, let's go straight to the charts now. So what you can see in front of you is a typical chart setup of ours, of ours as a long-term trend trader. So first thing to note is I have a big watch list. So in the top left corner, I have all the currencies available to me. Aussie dollar, US dollar goes all the way down to the South African rand, Japanese yen at the bottom. You want to have as many instruments on your portfolio as possible, and you then want to narrow down to where the money is. If you just focus on the euro dollar all day, every day, focus on gold all day, every day, you're not going to see the results that you want, because you want to be trading when an instrument is in trend. When it stops trending, you want to find something else that's in trend. So what causes trends? Institutions moving money from market to market, from instrument to instrument. That is what causes trends. So if you're just focused on the euro dollar, you're not going to be, most of the time, you'll be trading in an environment which is not lucrative. And that's where loss is coming, over risking, over trading, chasing money, etc. Let the setup come to you. So the question then is, how can you identify where the money is? If I've got such a big portfolio, surely it must be very difficult to manage, which is often what I get asked. And the answer is no. It's very simple to manage a big portfolio if you know what you're doing. And I'm going to show you some of the techniques that I use. So top right is the monthly chart. Bottom left is the weekly chart. Bottom right is the daily chart. So I've got 3 charts that I use in unison. Okay, if you're using, let's say, for example, the daily, the 4 hour, the 1 hour, or the 5 minutes, if you're using that, start working your way up. You don't want to be on lower time frames. The lowest you really want to be going is the 4 hour. If you really want to be using intraday charts, 4 hour. Less than that is becoming very noisy. So how do I use the monthly chart? Well, the first tools that I'm going to load up are these pink lines. So these pink lines represent the high and the low of the previous calendar year. We've also got the closing price, but we can actually ignore that for now. So if I just remove the closing price, so I can actually remove that, and we can just focus on the high and the low. So this is the high and the low of the previous calendar year. As we're in 2016, this is the high and the low of 2015. So just to be clear, guys, that's January to December 2015. These aren't 52 weeks back from today. These aren't Donchian channels. This is the high and the low of the previous calendar year. Okay, what I'm looking for is price to be trading outside of these pink lines. This is how I start developing a bias. Remember, price is all about finding high probability environments in the market. In trading, nothing is guaranteed. The future is uncertain. That's the only certainty we have, which is the uncertainty of the future, which is why we want to learn to play on probabilities. We want to be able to create environments where we have more chance of making money than losing money. Now, remember, it's still probabilities and we can still lose. That's why we always have a small initial risk. Once we're in a winning trade, we then hold our positions and we compound to accelerate profit. This is the easiest, this is the best, the simplest, and crucially, the most proven way of trading consistently. Look at people like Warren Buffett, George Soros, Jim Rogers, the Turtle Traders, John W. Henry, Jesse Livermore, all the traders that we know that have or created significant sums of money were all long-term traders. The only people that really succeed from day trading are those with big sums of money, like banks, who can trade intraday, where a 1% risk can equate to large sums of money, where they have the money to create high speed, high frequency machines that can trade, per millisecond. We're humans with a different sum of money to start with. So we got to have a smarter, a simpler, maybe a slower approach. But once you get on the exponential ladder, the growth is pretty significant. Okay, so we want to see price trading outside of these pink lines. If price is above the high, we have a bullish bias and I'm looking for long opportunities. If price is trading below the low, I have a bearish bias and I'm looking for shorting opportunities. If price is inside these pink lines, I do nothing. I stand aside. And this is something that a lot of traders find very, very difficult to bring to their trading. Knowing when to stand aside, knowing when to not allocate risk to the market. So here is one technique, guys. So if we apply this technique, this very simple technique, to the rest of the watch list. So the first one was the Aussie dollar, US dollar. We're now looking at the Aussie dollar, Canadian dollar. You can see it's inside the pink lines. I'm not interested. If I go to the Aussie dollar Swiss franc, it's inside the pink lines. I'm not interested. If we go to the, let's look at the euro dollar. The euro dollar is inside the pink lines. We can see right there, it's inside the pink lines. I'm not interested. Let's go to the, let's go through to a New Zealand dollar currency. Let's look at the New Zealand dollar, US dollar. It's inside the pink lines. So you can see that by knowing which currencies are inside the pink lines, I can dismiss them. So which currencies are actually trading outside of the pink lines? Well, surprise, surprise, at the moment, anything that's related to the pound is where you want to be focusing. Any currency that's paired to the pound should be on your watch list. So if we look at the euro pound, it has a bullish bias. If you go further down, if we look at the pound dollar, the pound US dollar, the cable has a bearish bias. It's below the pink lines. Pound Aussie dollar, below the pink lines, bearish bias. Pound Canadian dollar, also below the pink lines. Pound Japanese, the pound Swiss franc is inside the pink lines, so this is not one that I'm interested in. Pound Japanese yen, below the pink lines for several months as well. Remember, this is the monthly chart, guys, so for several months, trading below the pink line. Pound New Zealand dollar is also below the pink lines. So what have we done? We've gone from 50 to 60 currencies that make up my whole watch list. We've then narrowed it down to the group that is outside of the pink line. So that's all the pound currencies. I then want to narrow this down further and choose the best 2 or 3 that are worth trading. This is how a portfolio is managed. Have everything on your watch list. Identify the group that is in trend. Identify the best 2 or 3 that are worth trading. Once those currencies go into consolidation and stop you out or reverse, you then go back to the macro picture, narrow down to the next group of currencies. So for example, all the yen currencies, and then narrow down to the best 2 or 3 worth trading. And this is what trading is all about. And it's a very, very, very simple process when you understand how to manage your portfolio. Okay. The next point that I want to bring up is these levels here. So beyond the actual pink lines, we then have major levels of support and resistance. I look for major levels of support and resistance on the monthly time frame. Now, I know a lot of people do this on the lower time frames, but remember, guys, the lower down you go, the more candles. The more candles, the more noise, the more levels of support and resistance you have to deal with. Most of them are very weak levels and not worth taking into consideration. By moving your support and resistance onto the larger time frames, you then have a very clear idea of where these support and resistance levels are. Now, I have a tool which will automatically highlight these major levels of support and resistance. So my software draws my support and resistance levels for me. Most people, if not everyone, are using manual tools. So they're drawing support and resistance manually, and it's a very difficult and time-consuming process. The logic behind this algorithm is a high bar or a low bar with a minimum of 10 bars on either side. That is what I would consider a major pivot. A minimum of 10 bars on either side. See, there is a rule to my support and resistance levels. If you ask most people what their rules are, it's all done visually. Well, I feel this is a support or resistance level. This one has the most touches, which can be significant, of course, but by having a rule and by having an algorithm to the way I draw support and resistance, it removes the subjectivity. And this is what trading is all about, because as private traders, we're at a huge advantage, and that is we don't have government rules and regulations that we have to follow, unlike institutions. But this then ends up being a double-edged sword because we don't have rules, traders have to make up their own rules. And traders aren't very good at not good. Fine. Okay, so let's just go back. Let's stick to the pound dollar, okay? In fact, let's quickly go to the euro pound if you missed the euro pound, just so that you guys can see this. Can you still see my screen, guys? Can I just get a yes that you can see my screen, that you can see the euro pound? Yeah, okay, fantastic. Okay, you heard me, B. Okay, thank you. Restart after you went through pink line analysis. Pink line analysis. Okay, so there is the pink lines. We're looking for price to be above the pink lines or below the pink lines, inside the pink lines. So if we go to the euro dollar, you can see that the euro dollar is inside the pink lines. So anything that's inside the pink lines, we don't want to be trading. The euro pound is outside the pink lines and it's bullish. So that's an instrument that we should be looking to trade. However, as you will have heard, but you probably did not see, we can see that price is currently contending with this resistance, which is also the round number 0.9. So until it breaks through these resistance levels, we want to be standing aside. Okay, and these red and these green levels, those are the major pivots I'm talking about, where you have a high bar or a low bar with a minimum of 10 bars on either side. So if we go to the pound dollar, we can see that the pound dollar is trading below the pink line, so it has a bearish bias. I've been short since around 1.4, so I've got positions running for almost 2,000 pips. We can see that price is trading below all of these major pivot levels. So where is price likely to head towards? Well, if I compress the chart, we can see that the low, which is the 1985 low, is the figure 1. So there is a very good chance that price may weaken another 2,000 pips to the figure 1. Okay, remember that's the direction that I want to be going in as a trend trader. Now, if it clears 1.2, sorry, if I just compress the chart again, if it clears 1.2, then the first stop will be 1.1. If it clears 1.1, then the figure 1. Okay, so that is how I look at round numbers. If we go to the weekly, below the weekly 200, below the weekly 50, below the daily 200, below the daily 50. So we have a bearish bias. As already mentioned, I've been short since around 1.4. So now price is finding a little bit of support around 1.2. Now notice, price doesn't move in a straight line. I went in short, then I had to hold during this period of consolidation. And this is where a lot of traders struggle. Now, what you need to understand is that there's a natural rhythm to the market. Over summer, the markets go quiet. Why? Everyone's on holiday, including market makers. So we expect the market to consolidate. So I opened short positions, and then I held my short positions over summer, and I waited for the trends to come into play. And you can see, as true to form, come September, we've started seeing movement. Summer, no movement. September, trends are in play. Currently, we're seeing a little bit of a breather movement here, and that's because of 1.2 acting as a support level. This is not uncommon, guys. We can't expect the market to continually shoot. After every move, there has to be a breather. I'm holding my short positions. The next breakout, which is below this pivot support and around number 1.2, I will add further short positions. Okay. Right, guys, can I just get a quick hands up that you can see that and if everything makes sense? If trend inside the pink lines, do you trade? B, the answer is no. Okay, I mean, you want to create environments where you have a very, very high chance of trading. So anything that's in the pink lines, learn to dismiss it. If you are going to trade inside the pink lines, reduce your risk. So outside of the pink lines, I allocate a full 2%. Inside of the pink lines, I reduce my risk 1%, 0.5%. But that depends if your account size is large enough to allow you to allocate a small risk. And remember, one thing that's really important is you want to have well-placed stop losses. Most people have very tight stop losses. If you have a tight stop loss, sure, that will allow you to risk small, but the tighter the stop loss, the more chance you have of being stopped out. Let me give you a clue. The euro dollar has an average true range of around 90 pips a day. If you compare that to the pound Japanese yen, the pound Japanese yen has an average true range of around 200 pips a day. If you have a stop loss of 100 pips on the euro dollar, you may be fine. If you have a stop loss of 100 pips on the pound Japanese yen, you have a very strong chance of being stopped out. So you need to be able, you must calculate your stop losses based on the unique volatility or movement or characteristics of that individual instrument. That will then guide you on how you can allocate your risk. I hope that's clear. Don't decide in your head, I want to risk 2%, and then place a stop loss that allows you to risk 2%. That's not how it's done. Calculate where the stop loss should be first, then calculate if your risk can be managed within that stop loss. Traders have to totally change their approach. Too many traders are failing because of a lack of understanding of how to calculate stop losses, how to manage portfolios, what instruments to be trading, when not to be trading and standing aside, how to be holding positions, how to be compounding. This is what makes a good trader. Simply knowing your support and resistance and being able to apply a Fibonacci or two doesn't make you a good trader. Okay, so you really got, guys, a lot of people really need to start stepping up. Okay, let's go on. Let's go on to the pound Aussie dollar. Pound Aussie dollar. Again, below the pink lines. Look at where the pound Aussie dollar is right now, guys. 1.6 round number. So it made its way through all of these round numbers and it's currently finding comfort around 1.6. We want to see price clear that level and go towards 1.5. If it clears this, then 1.4. These are the levels we want to see price moving towards. I'm already short on the pound Aussie dollar. Why? Because we're below the weekly 50, we're below the weekly 200, we're below the daily 200, we're below the daily 50. So let's think about it. We're below the pink lines on the monthly. We have space towards these next major levels of support. We are below the 50 and the 200, both on the weekly and daily. Everything is telling me high probability environment. Let's open the daily charts. Now, I've been short on the pound Aussie since 1.8. Again, very similar to the pound dollar. I went short. It went into consolidation. Why? Summer months. June, July, August is summer. Then September came in, and true to form, look at the weakness. We had that flash crash. Unfortunately, we had that flash crash on Thursday before NFP, and that's what's created this wick. So now I will compound once this wick has cleared. So a break and a close below this pivot support, and I will start compounding further. If you're not in this, you should be looking to wait for price to clear this support level and then look for a short. Okay, let's go to the pound Canadian dollar. Now, I'm not short on the pound Canadian dollar because there were too many support levels in the way. So this goes back to what I was saying about managing a portfolio. I had the pound dollar open to me, the pound Aussie, the pound yen, the pound CAD, the pound Swissy, the pound New Zealand. You know, that's 6-7 options. Out of those 6-7 options, I only want 2 or 3 that are worth trading. So the pound Swiss franc, which we looked at, was inside the pink lines. So I dismissed it. The pound Canadian dollar had too many support levels ahead. If you compare it to the pound dollar and the pound Aussie dollar, too much support ahead. So I wasn't interested. I dismissed it. The same with the euro pound. At the time, I know the euro pound in hindsight looks good, but at the time, there was too much resistance ahead. So I wasn't interested in the euro pound. What I have are short positions on the pound dollar, the pound Aussie, and the pound yen. So pound Canadian dollar, not one that I'm looking to trade, but you can see very similar to the other pound currencies, below the 50, below the 200 weekly, below the 50, below the 200 daily. If it continues to weaken and you get a good entry point, by all means look to take the trade, but not one I want to trade based on the support levels ahead. Quick look at the pound Swiss franc, as already mentioned, inside the pink lines. Now, if I open the chart and if I compress this, we can see that if price breaks out of this, price breaks and closes below this support and the figure 1, look at the potential weakness. Lots of space to move, potentially. So one to keep an eye out on if we get a breakout to the downside. Weekly and the daily are in alignment, as are the others. On the other currencies, but not one that I want to trade until it breaks the pink lines. Right, pound yen. Pound yen, I was short on for several months, from just below 180 to 150, so around 2,500 pips. I closed my positions because of Brexit. Now, in hindsight, yes, I should have kept my short positions open. But at the time Brexit was being released, it was all 50-50. We had no idea in which direction everyone was convinced that the UK was going to stay in the EU. Many people didn't vote because they were so convinced that was going to happen, but the UK voted to leave, and that crashed. That caused a big drop in the pound on the day of the release of Brexit. And of course, I was short from around this level here, and I closed my positions around this level here. But I left my positions open. I'd be in very good profit now on across all of those positions. And those positions would have been open from December, January of last year. Sorry, December, January, end of December last year, January this year. But I closed my positions. I then got back in at the 140 level, and I'm now short. I'm back short on these positions. A break and a close below this pivot support, and I will look to add further positions. I currently have, I believe, if I remember correctly, I currently have 5 or 6 positions open, and my total profit now is running at over 5,000 pips. Okay, so these 5 or 6 positions running at over 5,000 pips. And this is only set to grow. In previous rounds of trend, I've exited at over 50,000 pips on some of my across all my positions over 8 or 9 months. And this is on a very low number of trades, 20 to 25 trades. Rather than be in and out of trades on a daily basis trying to chase money, which is what you're encouraged to do, which feeds right into the hands of the broker with spreads and commissions, take only a few trades and let those positions run. People then say to me, well, what about rollover charges yeah, what about rollover charges? Well, first of all, if you use the right broker, you can use future contracts, so there are no rollover charges. Secondly, you need the broker to execute trades, which means that there will be some costs to running a business in trading. We can't eliminate that. We can reduce them, but we can't eliminate them. So by knowing how to trade and how to use your broker account correctly, you will then reduce certain costs, but you can't eliminate them altogether, guys. Just don't feed into their hands by day trading all day, every day. Okay, final currency we'll have a look at is the pound New Zealand dollar. Now, the pound New Zealand dollar is creating all-time lows, and we can see that. So if this continues to weaken, this could just simply fall off the edge of a cliff and just go all the way down to 1.5, 1.4, and so on. Below the weekly 50, below the weekly 200, so we have bearish bias. Below the daily 200, below the daily 50. So everything is in alignment. What we're now looking for is momentum to the downside. Okay, a break and a close below this pivot support will suggest a continuation. If you want to get in aggressive above this pivot, then reduce your risk 0.5%, 1%. When price breaks and closes below here, you can start looking to allocate full 2% risk. You don't want to risk more than 2% at a push, 3%, but 2% is really where you want to be. Okay, so that's all the currencies that I wanted to have a look at. If there are any questions, guys, can you please put them in the chat box? I have 4 minutes left. While you guys look to fire across any questions that you have, let's have a look at some of the stocks that I'm currently trading. So Nvidia, I'm long on Nvidia. I've been long since $40. This is now at around $70. Okay, again, round numbers, 40, 50, 60, 70. If this clears $70, I want it to go towards 80, 90, and $100. If it clears $100, $150, always go in the direction of the trend. Above the weekly 50, above the weekly 50, above the weekly 200, above the daily 50, and above the daily 200. So everything is in alignment. Look how well it respects the 50 as an area of support in a bull trend, and of course an area of resistance in a bear trend. Okay, another stock that I am currently long on is NUS. It's only just broken out of the pink line, so I've only just opened a small position to test the waters. If I'm wrong, I'm wrong. I'll get out with a very small loss. If I'm right, look at the space from around $70 to 140. Trading is all about risk to reward. You have to risk to make the reward. Keep your risk small. Let your reward be far greater by letting your winning positions run. Okay, a quick look at a UK stock, Boohoo. I don't know if you're familiar with Boohoo, but I believe it's an online shopping chain. And you can see from around 40, it is now at around 120. If you go to the weekly, above the weekly 50, there is no 200 at the moment because there's not enough data. And if you look at the daily, above the daily 50 and above the daily 200. Now just in an area of consolidation. If you look at the features of price, trend, consolidate, pullback, trend, pullback, little bit of consolidation, next trend, pullback, trend, pullback, trend, pullback, bit of a consolidation. 100 acting as a level of support. You can see it right there. Pull back to 100, a bounce off 100, showing you again how significant these levels are. Okay, that is all the charts that I wanted to go through. There doesn't seem to be any questions coming through, so let's end the webinar here. Just before we move on, let me direct you once again. If you want to take your trading further, tdtpro.trade. By the way, guys, this is £99 for a whole month of training. It's inexpensive. Okay, if you can't even look to put £99 into your knowledge, into your training, then you've got to question what it is that you want to get out of trading. Okay, you've got to start investing some money into this. tdtpro.trade is if you want to join the apprentice community. If you want to add me on Facebook, please search for me, Zaheer Anwari. We also have a Facebook page. Let me start putting some of these in the chat box. There's the Facebook page, which is the Dynamic Trader. So just search for us. If you're on LinkedIn, please add me on LinkedIn, guys. I post a lot of charts on LinkedIn. Of course, I'm on Twitter, as are we, as the Dynamic Trader. So search for us. I'm also on Instagram. Search for my name, fx.mentor. I'm doing pretty well, over 40,000 followers. Organic, by the way, in case I don't know if you think I've been buying lists. It's all organic. There's no buying lists. It's all very genuine and honest here. So if you want to go through my Instagram, there's lots of quotes and knowledge, etc., all on the Instagram. And finally, if you want the ebook, please email me on zaheer@tdtpro.com. I'm just putting this in the chat box, guys. Yep, Ron, I've just sent that over there, zaheer@tdtpro.com. Please email me and I will send out the ebook as soon as I get your email across to me. Okay. Thanks, guys. Thanks for sitting in. That is now 4:45. Thank you, administrator, for the opportunity. Thank you for FX Street and everyone listening. And also, if you're watching this on replay as well, thank you for your time. Thanks all. Have a lovely week. Take care. Bye-bye.